All right. Good evening, everyone. Hope all of you are doing great. So, in this video, I will be talking about how to use the ICT concepts, and I will be talking about also some concepts like the order block and the discount areas and the premium areas, and what you need to look for before entering any trade. And I will be talking about the London session in the last Friday, how the prices did went to the higher prices, and why it went to the higher prices, and also there is a macro ICT didn't talk about, but from my personal experience, I have found that there is an entry almost every day, and I will walk you through how to find these entries during the day in some specific time where the markets tend to do some specific things. So now let's start to talk about the London session, which we all know that it starts at 2 a.m. You can see it here. It's 2 a.m. in New York local time from here. So normally I do look at the gold before the London session starts and start to analyze it. But I was speaking with a guy and we were planning to buy it, but I said that we need to wait for the macro time, which is the London session. And I will walk you through how and why did the prices went to the higher prices. Now let's go to the 5-minute time frame and see why it went to the higher prices. So this is the London session here. All right. You can see that there is a new week opening gaps and there is a new day opening gaps, but I want you to forget about them. And let's look why did the prices went to the higher prices before the the London session starts. So we are on the 5-minute time frame. If you go to the 15-minute time frame, you can see that there is an order block, which is this one. This is on the 15-minute time frame. And if you want to buy, you have here first a buy side. So if you want to buy, you have to wait for the prices to go to a discount area, which is below the 0.5 level on the Fibonacci, and then wait for a market structure shift or a change in the state of delivery. So now let's go back to the 5-minute time frame and see what the prices did. So remember, this is the order block on the 15-minute time frame. So I took this move from here to here to see where is the discount area, which is here. So I have to look for entries in these areas, which is the discount. All right. So this is the order block that we found on the 15-minute time frame. This is the only BD array that we can see. There is no fair value gaps, or there is, but which is this one. But the prices, I wouldn't expect the prices to reach to this area, especially if we did a market structure shift or a change in the state of delivery on a lower time frame. So we see that the prices before the London session came back to this order block. And I did expect the prices to stay here a bit. And then in the London session, we can go to the higher prices. But it did not happen as I was expecting. So how to identify the order block? This is how I identify it. And this is how I use it. And you can see the results from my Instagram account and see how I use it. And also in the VIB Discord, where I share almost everything. So this is the order block on the 15-minute time frame. And we need to look for a discount area to buy, right? On the lower time frame, we are now on the 5-minute time frame. I will take this so we can see the price in more clear. So you see here inside the order block, there is a fair value gap, which is under the 5-minute, the 0.5 level on the Fibonacci. You can see it here under it. So we see that the prices, they came back to this fair value gap, and also there is an order block. So in these cases, what you need to look for is first a macro, which is from here to here, from 150 to 210 New York local time. So the prices did get back to this order block, which is also, there is a 5-minute fair value gap. You can see it here. Forget about the 15-minute fair value gap. And you need to go to a 1-minute time frame and see how the prices react in order to target the higher prices. But why you need to target the higher prices? Well, first, if you go to the 15-minute time frame, you would find that the prices are trading into this new week opening gap. This one. All right. And from the higher prices, you see that the prices did close above this resistance. I will show you how to identify the resistance area or support areas from the retail perspective, but I use it in the ICT concepts, and I will show you how also to find the correct support or resistance area. So we see that the prices did close above this area. We see that the prices also on the new week opening gap didn't make a market structure shift, and the prices did trade it into this order block, and we see how the prices respected it. So the idea, it should be for the higher prices to take this buy side. So now let's go to the 1 minute and see what the prices did during or before the London session. All right. So here, after the prices did came back to this order block, which is this one on the 15-minute time frame, here the prices did make a market structure shift, which you can see it here. This is a market structure shift. And then it did a fair value gap. Which is this one. All right. And then the prices did take the buy side. You can see it here, how the prices did trade it into the fair value gap after making a market structure shift. And then before that, we were tabbing or we were trading into the 15-minute order block and also the 5-minute fair value gap. And then the prices did go to the higher prices in a really strong move. And this is why I didn't trade the gold in the London session. Because I was expecting higher prices, and the prices did go to the higher prices before the London session. So for me, that's it. Because I was aiming to this buy side. So this is how to identify the order block, and this is what you need to look for in order to trade the London session. But I want to show you another thing which is really important. First of all, I want to show you how to identify the support or resistance area from algorithmic perspective. I've been using it since really long time, and it actually doing great with me. So we see first we are on the 15-minute time frame, and we see that the prices did take this high and it closed above this wick, which means I will not take this wick as a support or resistance area. So next, I would be looking for a candlestick on the 15-minute time frame. Why on 15-minute time frame? Because I trade intraday and I'm a day trader. I don't swing trade. I don't let the trade to stay longer. Maybe there is some other things I need to focus on when it comes to swing trade, but for me, I'm a day trader, so I prefer to look at the 15-minute time frame and then go to the 1-minute time frame. So, to identify the support or resistance areas, I look for a candle that it did a wick, and then the first candle, it did the wick, and then I would take this wick as a resistance area. But what if this candle closed above this wick? Then I would take this candle's wick. All right, and then here you will see how the prices did respect the first wick that we didn't close above. All right, the first thing you need to focus on, it's a wick that you didn't close above or below, which you can see it here also. We didn't close under this wick, so I would take it as a support area, which you can see how the prices did respect the first wick that no other candle that closed under the wick. Yes, there is some wicks here, but there is no 15-minute candle close under this wick. So I would take it as a support area. So this is how I take the support and resistance area. So now I want to show you something which is a macro. I will go to the 1-minute time frame now, and I will show you a macro that no one talked about it before, and it happened almost every day. This time of the day, the gold moved in most of the time in the opposite direction for the day, and always there is an entry to target normally the lower prices. Normally, I don't know why, but thanks to the ICT that he teach us how to look at the the markets in time first and then the price. So the macro, which is 4:15, which is here, 4:15 to 4, you can take it as to 5, but I would take it to 4:30, which is here. All right. So remember, this is the 15-minute wick that the prices didn't close above. And we will add the middle line. All right. So we are on the 1 minute time frame. So I want you to see how the prices did respect the middle line of the 15-minute resistance area. You see how the prices here respected it, and here, and here. All right. So the macro. There is a time in the market which is between 4:15 to 4. You can take it to 4:45, which is 30 minutes, but I will show you 4:15 minute. To some reason, I don't know why, the markets go against the bigger direction, let's say, and go to the lower prices between 4:15 to 4:30. And I will show you how the prices went to the lower prices. And we will go to another areas or another days, and I will show you that it is not always, but 80% of the time you can find an entry. So between 4:15 till 4:30, the prices did take this buy side. You can see it here. All right. And then it did a change in the state of delivery after closing under this candle, which is the order block. Why this is an order block? Because this is the candle, or this is the sum of candles that did take the buy side, and then boom, made a change in the state of delivery, and it closed under it. And then you see how the prices did traded into this order block at this point here. The first time, which is in this candle, in this candle, and then the second time in this candle, and then it went to the lower prices to fill this fair value gap, and then to take the sell sides here. You can take this setup and use it every single day. And I will show you, and I will go back to some areas in the same time where the markets tend to go to the lower prices, especially lower. I don't know why, but normally to the lower prices at this time. And also see here this move, because I told you from 4:15 to 5, the prices from this move to this move, and it went to the first BD array, in the premium area, which is this one, and then continue, boom, to the lower prices to reach for this new week opening gap and to take this sell side. Yes, we didn't take this one, but in general, we take this sell side. Now, I will go, this is a Friday, by the way, and now I will go to Thursday to 420. All right. So in the London session, in this day, we saw how the prices were trading to the higher prices. We took this buy side and this buy side. And as I told you, between 4:15, which is here, to 4:30, there is an entry to the opposite direction, which is here. Right? Here. Between here and here. We see that the prices were trading after taking this aside. Alright? And then the prices at this point did a market structure shift. And after that, well, you can take this one, but I prefer this one, which is the clear short-term high. The prices did traded above this high and then did an order block. And once the prices made this order block, look what time is it. Yes, as I told you before, you can find an entry between 4:15 to 4:30, and you can extend it to 5. So here, the prices did take the buy side, or did a market structure shift, or a change in the state of delivery. In this case, I call it a change in the state of delivery. Maybe some of you will tell me that it is wrong. Anyway, and then traded into this order block, just tabbing into this order block, and then boom, to the higher prices. And at 5 a.m. or before it, we took the buy side. And see how the prices traded into the higher prices. Like really strong move. In the 20 minutes, the prices went almost 70 pips on gold. All right. Now let's go to Thursday. Wednesday. So as I told you, there is a macro between 4:15 that you can look for an entry here between these two times. All right. So we see that the prices were trading to the lower prices. All right. From here, the prices did trade it into this new week opening gap. I know it is not your setup, but from an algorithmic perspective, the prices did go to the new week opening gap and then boom to the lower prices. And I said sometimes that the prices go into the opposite direction, which you can see it here. Before 5 a.m., the prices did a change, market structure shift after taking this side, and then it did trade it into this fair value gap. And there is also this is another fair value gap. And then it went to the higher prices to take this buy side and this buy side. Now let's go to Tuesday. Okay, so the prices here from 415 to 430. As I told you, there is normally that there is an entry to the continuation, or most of the time it is for the opposite direction, but there is an entry. All right, you can see there is a fair value gap, right? The prices were trading into this fair value gap, but on the 415 the prices were not into this clear fair value gap, and then the prices came back to this fair value gap, and then it went to take the sell side and continue to the lower prices. But there is an entry at 415 to 430. You can look for an entries to target in this case, the sell side, but most of the time it goes against the direction. All right. So the last day, let's go to Monday. All right. On Monday, this is the 15-minute, 415 to 430. So we see how the prices were trading into the lower prices in the London session. This is London session from here, which is here. And the prices did go back to the lower prices. But as I told you, in this time, between 415 to 430, the prices go against the direction. And you can see how the prices did go back to this fair value gap in the macro, and then it went to the higher prices, which is this buy side. So this is the time I want to talk about. I hope you guys find it insightful, and if you need anything, just send me a DM and I will answer all your questions.